Greetings, market rebels. Welcome to this week's macro measure combined with our sector situation video. It is Friday, December 5th, 2025. It's just about 3 p.m. here on the East Coast, roughly speaking. I'm Wayne, going to get right into it. Here's our trusty market rebellion disclaimer. Here's our trusty market rebellion intellectual property rights notice. I hope you're speed reading these. And then we're going to get into last week's messy slide. We always have messy slides, so nothing we can do about it. This is just a small smattering of all the things we'd like to cover, but we do the best we can under the circumstances, which are really time pressured circumstances. Anyway, last week I did some highlighting for us, kind of put this like purplish color on some of these things that maybe were good things to mention, maybe were a little bit on the helpful side. This is probably the line here. Remember seasonality up, have a chance to put the messiness behind us. Bears did decent damage, but trend reserve. So should be bull cycle time. That was one. We talked about it not being easy. We talked about probably being need in terms of the most likely scenario, pause or brief pullback, then resumption. So we thought that only really legitimately negative, serious news developments would derail the market. But that's really the need of pause or pullback was up here as well. So that was really the main message that we thought. And that was really just based on the way that things finished, the kind of move that was made, things like that. And that really did happen in terms of the start of the week. And we thought, okay, that's fine so far. We'll cover that on the charts. But then, it really wasn't that much fun thereafter. Fortunately, we just got fortunate in terms of some of the selections that we had this week and most of the momentum services. So it ended up working out pretty nicely for those ideas, but it wasn't market wide where things were really ripping and roaring higher. It was really selective, and we were fortunate enough to be in some of the names that worked well in a relatively range bound sort of consolidating, help consolidating churny type of market. Anyway, this week's slide title I'm going with is a happy betwixt and between with question marks because we never know. And the reason I'm saying that is because that's really where we were. I chart the SPYs as our main proxy because people prefer that over SPX so they can trade those levels with certain, I guess, with certain ATMs or whatever the case may be, out of the monies, in the monies, whatever they prefer. But that's where I think we ended up. And I think that this is really reduced. We don't really have a ton on here. Not to say that it's become less interesting, but I just wanted to keep it a little bit cleaner if I could, not go into so many things. We'll try to do that at the right time. So I don't like to drone on about we drone on about enough. I don't like to drone on about the risks that are percolating, risks that are percolating. We think it's important. We try to share them all week long in webinars, but usually they get ignored due to the price action, and that's just the nature of the beast. So let's make sure this laser is working. Anyway, the cutting rates and juicing liquidity is very interesting, right? You're doing this at essentially you're at the all-time highs, right? You're just not even 1% away in SPY. So it is what it is. As far as things being really ready to go, I'm kind of holding off on that. I'm kind of jumping down here and saying that the most likely scenario is that it's very difficult to call right now due to the rested market. So I'm going to say that we basically our plan has to be to go with the flow. But if pressed, if you really want me to make a prediction, I think the gang may pull us down first before gas pedaling it to New Year's Eve. That's what I'm thinking. The reason for that has to do with this major sort of flip around. So because I like to just clown around, I'm calling this sort of the AAII double whammy. I think these paths we're going to touch on paths. Again, I'm not going to bore people, but I just think this is so important because it's the price path that makes us the money in terms of the trading. It's a lot easier to manage when you get in and effectively get a straight line north, but we all know it doesn't work out that way all the time. So that's why these paths are important, and you just can't really go into coast mode much of the time because there's always some wrinkle they're throwing at you. But this double whammy is pretty important. So let's kind of break from this and go with that, if you will. So just give me a moment to reposition things, get them out of our way, and then I'll try to bring up this one little tidbit with AAII that supposedly was, well, why is that not showing up on my screen? Oh, there it is. Because I'm doing it wrong. It's my own fault. So let's get this shared on my main sort of chart screen, which will be chart screen number 4. And this should show, this will show CNN, fear and greed first. But I only left this up here because that could just sort of show you in a way how out of whack things can be with this. That's why I always say, maybe it's a less than ideal or make some kind of a snide comment about it because, right, it's really not perfect, but it is something we can go to when it matters. And this is in fear, but really AAII, I think, is telling a much different story. So I'll back up on AAII sentiment survey, and you can see this surge here from last week. Your bullish percent really shot up. This is one of your larger jumps over the last, say, 6 months, maybe the second largest jump in terms of the bullish percent skyrocketing. But it also it also reflects the fact that the the bearish percent has really pancaked. It's really cratered. And so you've got a lot. It's really a big swing. I mean, a lot of these people could have remained bearish, and this could have really shrunk, right? The gray area could have really shrunk, where a lot of neutral folks could have become bulls. But you kind of have this really relatively unchanged gray area in terms of neutral market participants because you had this big swing in both really bullish a really bullish jump by the Bulls, and the Bears have really been reduced. So that's a real swing. That means a lot of people were really affected by what we saw recently in terms of the nice move back off of the lows. And it might be that this is a little too far too fast, where now that so many people are focused on, hey, this is likely to be this bullish situation. This is why I'm leaning towards saying if you press me, that there's going to be a little bit more of a pullback here, probably before we really start to ascend. And I was mentioning that this week that it might be a little too early in December just to go up, up and away for the rest of the month. So that's just food for thought. Obviously, there's really no day-to-day predictive value or predictive formulation that I know of, at least just from sentiment surveys and things like that. But we always get concerned when the boat sort of the boat riders are flipping as strongly as they have away from bearish and into bullish. It's really, really a strong flip. So I think that means you could have a little bit too much weighting. This is contrarian. That makes it hard. We don't know the news coming in over the weekend. So that's really about it. In terms of the charts, let's bring up this one here. And I'm going to bring this up, and then we're going to go look at, I want to make sure this is showing properly. Yeah, it is. I'll go into a special chart that I created, just nothing really special, but just a basic chart to show some paths that I think are fairly common, right? So I'll start out with the blue path, or will it let me do some sort of annotations, and maybe it will. So I'll start out over here with the blue path, and you can see that this is really more of a, oh, it doesn't give me the real big boy, oh boy, maybe I'll just stick with this. I thought I could maybe get us some better stuff to work with here. Maybe this, nope, that's not it either. I probably have to adjust things on here, so I'll have to just use my pointer. My bad. I tried to get a little bit better for us, but this never seems to work right. The drawing tools are probably my fault, really. But I'll start out with the blue line, and that would mean, right, that we try to advance. We kind of shake off this week, which really isn't a bad week at all, by the way. But let's shake, say we try to shake this week off where we didn't really advance, and we come up here and we hit this area near the all-time high, which you got really close to. I mean, I think earlier today you were a little bit more than 1 point away, just to give you an idea. So we were thinking they could maybe do that, get back towards the all-time highs after what they'd done, and they could get through here and go. And they got really close so far. But that would be right the double top, where you kind of come up here, you fail right at just about the same level, and then you start pulling back, right? Just a natural pullback, and that brings you back to some level down in here where there's been more market activity, and the market likely finds support once it gets down there, maybe scares a few people and has them change their mind. Another pattern would be you go even stronger, you blow right through the all-time high, and then you pull back from there to the former all-time high or near it, find support and go again. This is pretty much the textbook thing, probably almost everyone wants to see, especially technicians that like to look for that kind of a thing. Then you have the other one, you have this kind of mild, quick corrective action in white, where we would sort of say, okay, this is not a pretty candle, especially if we close poorly today for whatever reason. We start to close near the low of the day or maybe even make a new low. I don't think that'll happen, but you never know. There's 45 minutes to go. Then, right, that might scare people. You might have some follow through due to a failure really to reclaim or really touch this high back here. You might get that big sort of big quick drop, right? In relative terms, like it's not obviously massive, but it would be this quick whoosh down early in the week, and then they'd start to, just like they did this week, they'd repair it. But it would look like a little bit like a false breakout or failure to really make a new high, and that could easily pull more bears in, have some bulls abandon hope, and so on and so forth. But that would get them one more shakeout, and then they might be able to say work on post FOMC, working the market back up. You could also have something even more severe than that, where it looks like it's just going to be garden variety, little pullback, little wrinkle curveball they throw, because there's still really almost 4 full weeks. Well, there are almost 4 full weeks. It's 3.5, I guess, to the end of the year. So maybe they're a little too far, too fast. Maybe they pull it back, scare even more people, and set themselves up for an even more powerful end of year rally, because they did sort of chase some players out that thought, oh no, there's a problem, we're not going through, and even more people bail out on it if there's a deeper pullback. So those are just some scenarios or paths that could play out. And that's why it's really hard this week, because if you look at everything, I think on balance, like we try to do in these videos, if you look at the sectors, which I'll bring in here, there's some really great things that happen that I'm not going to belabor because I'm trying to keep this to a reasonable amount of time. I don't want to hit on all these finer points, just not the week to do it. But one thing, as many of you know, we've been looking for the XTN. Now, I should pull this up on the larger chart, but we've been looking for XTN, XLF, XLE to really go, because those three are, in my mind, and I think a lot of players' minds from way back, it's really important to see uh, the energy in demand, right? It's really important to see financial products and so on, and money flowing through the system, the financial system. And it's really important to see products flowing through the economy in the transportation sector, and also business travel and so on and so forth. So that's all good. This is former leader XLC, which had been in a corrective phase. It's trying to break out from that, having a very good finish to this week after pausing last week. I don't even know what that is. I'll have to get to that alert later. My colleagues are covering EOA for me, so hopefully they'll be able to check in on that. And former leader XLK, that also, right, has had a really good spring back, and it's very close to probably the last sort of flatline resistance before it would attack the all-time highs. And so we'll look at these on a little bit larger chart. I'll bring this chart over. My my main chart that we look at. And I'll just point out that before I leave here, because I don't plan on coming back, that basically, right, the defensive sectors have not done very much this week. Meanwhile, XLY has, right, discretionary and some of these other offensive or offensive sectors, right, they've all done better. And on balance, the sectors look quite good, I think, because of those three and the former leaders looking like they're getting close to trying to re-engage. So here's the SPY, but what I'll do is I'll bring in XTN. Let me get rid of this right here. I'll bring in XTN. And you can see how long this consolidation has wore on for, right? This has been going on and on and on for most of the year. And we kept checking into it saying, okay, what's going on? Looking for hopeful signs from it. And then there just haven't been any, right? It's threatened a few times. We thought, oh, maybe this is it. And it never really could break out. But here you go. You're breaking out now. Probably right. A little short term overbought at the moment, without question, given the kind of run we've had. It's not terribly overbought, but short term overbought. I think the daily's got like a 71-ish RSI. On this particular chart, it says almost 73. The calculation on this one's a little different than the standard. But anyway, you're in that slight overbought range. Not the end of the world, but probably right. Probably after this kind of 2 week performance, probably does pause or pull back a little bit soon. Probably. But there's a lot of money that I think is headed into here now. It's starting to seem as though more are convinced, and you've really cleared things out. Now, you haven't even taken out the high going back 1 year, so your 52-week is still out there, but you're getting close to it, and that is a good sign. I think a lot of things bode well for next year if we keep or enhance these complexions that are in place right now, as long as they don't deteriorate dramatically. Things are really shaping up nicely from the chart perspective, which I will note that the charts do not have everything factored into them. They have a ton factored into them, but there's always some things that are just not well known that can't be discounted by the market because not everyone's privy to that information. But we only have these to work with though, because we're not wired, we're not dialed in, we don't have special data or information sources and things like that. So we do the best we can. But XLF, excuse me, is creeping back up towards the highs. We've had some ideas in both of these. We also had ideas in energy, and this is all because of the sector work that we do, just keeping an eye on the sectors, keeping an eye on the UOA. And then when you have sectors that are acting well and you get UOA and individual names, especially when we see it hitting multiple individual names, then right, that's very encouraging. You got good looking charts. You've got a market that's been acting much better the past few weeks after correcting, knowing that right, it's sort of oversold. There was too much fear, as we said, it was sort of wrecked or bombed out. And so it becomes just this overall stacking probabilities situation. XLC here, here's the XLC look, and it's finally moving past that resistance line. We even have an idea in XLC, which is clearly not a big mover, but some people like trading ETFs. And sometimes we get hits in the major index ETFs. And so if things set up, we try to get those ideas in. But this is one we did get in very recently. I think it was only like a day or two ago. I can't remember when. Just too much every week. There's just too many symbols I'm looking at. But this is really right encouraging. Got to say, does it probably have a little bit of a pullback to the former resistance line to see if it can convert that into support? I would say probably. That's what I'm getting at. That's what I'm kind of thinking about the market. There's probably a little wrinkle. If I had to bet on it, I'd bet that there's going to be a little bit of a wrinkle before we just go straight up, up, up. But again, I don't know what news is lurking. But you've got that. You've got XLK. Again, these are former leaders. They're acting well. They're getting very close. You should hopefully be able to see that on the larger chart. Getting close to where all that's going to be between them and the all-time high is a little bit of room. They're getting very close to taking out resistance. And SMH, as we talked about, these V recoveries, you can see it more when I elongate it that way. And you can see it, just another V recovery. And this is a lot like the XLK. And yet, if you look at the charts, this is despite this kind of a move, this is really not all that overbought, which again is somewhat encouraging. Not to say we go in right away. If we did start breaking out, I would go with it for now and just be aware that you're trading near overbought territory, which for me means I manage it a little more with a little more of a short leash and just more quicker rolls and things like that, rather than just letting things run, run, run. Anyway, SPY, this is where I'm getting into betwixt and between from, backing up into this information. This is the line that many of you remember from most of the year at this point. Since we put the market lows in, we've had this line that we've had to either slightly modify or extend over and over and over. And you can see that we tried to break through from there. They brought it back in, kind of as we suspected was most likely early in the week. That's Monday right there. You stayed really between that, and you're still sort of being affected by it, but yet you stayed above here, right? You didn't really fall back into the downtrending channel yet. So that's why I'm calling it betwixt and between, because overall, I think you have to be happy with this. You have to have a smile on your face if you're a bull, because if you launch this big leap in this holiday impacted week that people were thinking is dubious, I'm sure, and then you manage to only give that much back, right? Monday is really the low of the week. Monday's low was the low of the week. So you only gave a little bit back from this close here, and you've sort of sideways for much of the week. So it's been a little underwhelming in terms of tradability. It hasn't been a great week to trade, especially in these ETFs. Well, I should say at least this ETF, but it has, like I said, it has been very good in some stocks, and we were fortunate. Most of the time when it's like this, it impacts what we do, but every now and then you're going to be lucky enough to pick out names that didn't really get, at least some names that didn't get too bogged down in the bog, excuse me, in the bogged down of this that we've had. But this is only natural. After that kind of a major leap, I mean, I think you were up almost 4.5 to 5%, somewhere in that range, in really 3.5 sessions, and some of those were holiday impacted. If you're able to do that, well, I should add the Friday before. I meant like continuing on from the Friday, but overall, I think from low to high on this reversal, you gained roughly 5%. Let's just round it off and say. So if you only give a little bit back and you hold those gains like that, and your sectors are starting to perk up the way that they are, and let's see here, in terms of your market breadth, I mean, look at this. This is the McClellan oscillator's cooling off a little bit, and that's okay. But a lot of these other things they've really improved. They've really stayed with a positive complexion, if you ask me. I mean, they're basically uptrending. And I think your cumulative volume index, which I'll expand a little bit. I wanted to expand the advancers and decliners too, but this is really getting back up there. Not at the all-time high, but just off of it, just like the market. But this hasn't looked this good in some time. You have to go back really to, over a month ago there, excuse me. So you've got the cumulative volume index has powered up. You've got your McClellan summation having bottomed and lifting and trending in the right direction. You can see the new highs, new lows. It's, this is not the be all end all. What we try to do is just get a little flavor with some basic looks on things. And let's not forget to add, right, that the VIX, as we said a little while back, I don't know if it was last week or the week before, where I said, it should be under 18 at some point soon, maybe even under 16, I think is what I said. And they walked this thing back down, just like we said. As I said I would do, I did add some things, quite a few things. And I was lucky enough this week. I don't even know how I did this, but I was lucky enough to get out of them at the right time. Usually I don't, because I'm too busy, but I was lucky enough to get out of them. And, kind of when the momentum really ebbed, for some of them. One of them was Rigetti. One of them today was a TSM, where I got out of that and then they reversed that. I'm trying to think of the other. I can't even remember the other ones. It's just been that kind of a week. A lot of different things going on. But the point is that I just felt like with the market not really breaking away and not really getting away from being betwixt and between, and it really was sort of like, okay, we're not getting that really great stuff. Things are getting better, and that's good. And you have to be impressed, as I say. I think you have to be impressed that you held on to these gains at this point. But right, they're kind of keeping things hemmed in for now. And so with things being hemmed in like that, I don't really want to get too aggressive yet. I think they could be getting ready to curveball us, and I want to be ready for that. If that does start to slide, right, then that would be nice, frankly, because I think you could maybe come back to the 20 and 50, which are in close proximity, and then maybe they do a little scare beneath there, which is why that V, the red V, goes down below there. And then maybe if everything's copacetic, you just find a bit and start to reverse again. But that would kind of give you that inverted head and shoulders type look. And you can see here, right, where you start here, there's your right shoulder, you come to the head, you sort of create this little right, this would be your left shoulder, excuse me, create your little right shoulder, and then maybe you go. And that would really be obviously really special. And one other factor that I want to add in on this part of the discussion is the small caps. Now, this has been a focal point for us. We have been, we try to avoid cheerleading. We just kind of, like anyone, though, get excited about potential, knowing how far these are lagging. We've been lamenting the story on Main Street versus Wall Street, and Main Street versus Silicon Valley, and Main Street versus the government, the gargantuan government growth and all the things that have happened. I'm sure a lot of folks feel that way, and for good reason. But we've been hoping somehow that things would eventually spread and improve on Main Street and in the smaller companies where so many people work in the country, or at least would like to, or are clinging to working there. And the good news is this has had another good week. It too, because it finished in the overbought status last week. It too had the same kind of brief pause pullback we thought would impact the SPY and probably the other major index ETFs, but it's done quite well to get up here. It's right near the highest highs. The highest high was 252.77. Yesterday we got to 252.66, so 11 cents away. And I didn't even realize that today it's the same number. Wow. So you were 11 cents away on both days. So that could be a little bit of a double top where they could be used to scare people. But as long as they pull back and they put a higher low in, which means this little shelf we sat on, you really don't want to see that get uh, clicked through, traded through. But maybe if you do have a pullback, they put in an even higher low, and then that would also be another good sign. In fact, that would be a sign we would really be salivating over, because I love, as many of you know, I love when there's a very brief pullback after a run that's shallow. So after it fails and there's a shallow pullback, and then they dawdle it around for a little while, maybe post Fed, I don't know how long it would be, but then they start to go. That means, right, you basically refreshed right near where you needed to break out from, which I call a base camp. So you set up a base camp really close to a critical place to take out, and then you get rested, and then you make your assault right on it and go through, and you've got plenty of energy stored to do that because you did set up a camp and just chilled for a little while. So anyway, that's my corny way of explaining it, but that would be a sweet scenario, and especially as folks that are hoping that the IWM, for many reasons, that the IWM does really join the party that the other major index ETFs have been experiencing now for a few years, where we start making new highs. And this is the all-time high to my knowledge. And yeah, I mean, we could be breaking through there after this sort of swift, nasty little pullback that we had there for several weeks. And that would really be a welcome sign. And there's just so much catch-up room. This thing's still really right near the former all-time highs. If we go back to, I think, monthly, you'll see we're not that far from where we were years ago. You're really not. That's how rough this whole thing has been since the COVID madness, annihilated so many things. And you kind of have something akin to a cup and handle type situation that's unfolding on the IWM. It's certainly not textbook. I'm not arguing that, but I'm not someone that waits around for textbook. I'm more of a close, if it's close enough, I would treat it in a similar fashion. But I'm not strictly trading pattern. I just think it's patterns are something I respect though, because I've seen certain patterns reoccur so many times I can't even count them at this point or remember them. And I've seen some of these patterns are very effective. And when they launch a move, it tends to work out and work out well. And I think cup and handle patterns, I try to mention that every time. Those are one that I would never really want to fight against consistently. Let's put it that way. I'd be more apt to take those and run with them. But this, I think that's part of your equation, though, that look, this is a happy situation, right? You're betwixt and between because you haven't really broken out and gone in anything yet. We can look at QQQ. We can look at, and you're not really pulling away this week. But if your idea your idea of taking a loss, or as my kids say these days, taking an L. If your idea of taking an L is making a new recovery high this week after you already ran strongly, and we have a different way of looking at what an L is. I mean, I think that's quite impressive. And it's not that they ran up and did it. It's that they kind of did it in this sort of churny, take the froth out of the move, right? Sort of maybe refresh as you grind higher. And that's a really good sign. It's just that with too many people flipping around and us not being far enough away, I'm thinking that's why the curveball is due. That's really swaying me that way. I remember, the only reason I try to make this most likely scenario or prediction is to give people something to work with because it's been requested. But I don't really look at it. I try to set myself up mentally like I did showing those paths, knowing, right, that this is how things can unfold. And because we're operating in the short run, in most of the trading services that I'm a part of, I try to do the TA and my takes based on short-term management rather than longer-term position style trading or position style trading management. That's a different story. I would not be as reactive, of course, if I were long-term oriented, right? I'd be more into letting things breathe for longer, mainly probably using your weekly charts as my main focus, and then fine-tuning what I'm doing maybe with dailies and so on. But because of we're trading from day to day and we're trying to do the best we can each and every week, kind of like lunch pail players, I'm more focused on this kind of stuff. So as you can see, Diamond's lagging a little bit behind but not by much, just a little bit, right? Not by much versus Spy. Spy probably is the one that got the closest. It is the one that got the closest to the all-time high. So there's that. Today's finish with 20 minutes plus to go, right? Kind of a little bit of a dud finish to the week. Another reason, that you're left thinking, okay, maybe we don't go so bonkers. Maybe we allow for the fact that these guys could do a little mini rug pull or a little bit more frustrating type work for a lot of traders before they let this thing really go. Maybe they need to just scare players a little bit more. So let's go through things, make sure we covered most of what I had. Oh yeah, so I did. I see. There you go. So as I noted, the spies were entangled in our trend lines. Gains were well held, though, as we noted, and the sectors in the market breadth S&B, those were still very good, I think, overall. The crypto is the Achilles heel. That's been the thing I would say about this is that it could be that this is changing a little bit, where there's been a fundamental shift. I don't know in crypto. Maybe there's doubters where there weren't. Maybe some of this uh, weakness is really starting to worry people and shake people out. The Diamond Hands crowd maybe has a few less members attending their meetings. I don't know. I'm really not taking a shot at anyone. I've traded crypto. I always said from day one, I don't, I trade in it. I'm not really anything close to knowledgeable about it the way that some people are. I don't really factor that in anyway because I don't want my thoughts about what should be the case impacting what I think is likely to happen based on the feedback loop I get from the charts. That's just my preference for trading in the short run. I feel like a lot of that stuff that all the arguments people make and points they make, I'm not even discounting them. I'm just saying I don't know if they matter in the very short run. It's sort of like the market's going to do what it's going to do. And you can make this case, that case, and the other case, but the paths that they take in the times we're in there trying to trade them are what matters. Not to me anyway, not these other arguments that you can make. So that's why I'm not really that fixated on what a company does, how successful they are, how good of a management team there is. In this case of crypto, I don't know what's exactly happening here to cause this, but we did enter a new crypto idea. Most of the time, we try to play the long side in crypto, but you could see the intermediate term trend is not very good here in Bitcoin. And this was really looking with a higher low, like it was ready to go. And it got stopped in its tracks by this declining 20 SMA. So you have a downsloping 20 SMA, and it got caught and halted right in its tracks. That's not normally a good sign. So you're really still within this little corrective channel that some people are going to call a bear flag at the moment, right? So that is not really a great sign because there could be a rollover, there could be a retest of this low. For all we know, there could be a retest of this low. Maybe there will be new lows. So this sitting it out to this point where it's backing up to the extent that it is, it's not really re-engaging. I was lucky to get out of a lot of things, like I said last week, I think, or was it earlier this week? I can't even remember, but I had a bunch of little crypto names that look good on the charts that I got the pop and just got out. I was just like, you know what, I won't have time for these things. And, they're hitting resistance and I'm just going to take the money and run and I'll get back to them. And I usually don't get back to things. And I didn't really get back to them, but I was lucky when I look back that they really had gotten stopped in their tracks and hadn't done much. So this is why, right? You haven't really broken free of the downtrend yet. You're still sort of within the clutches of Keen and Win, if you know what I mean. So let's see if we can get this. So this would be a one line that I would put on here, that orange line right there. And I know this is messy and I apologize, but I'm uh I'm incorrigible when it comes to this stuff. I'm just going to admit that because this stuff just it ends up getting this way. Uh it just but these things actually I think they matter. Um so I kind of need to keep them. I need to learn really how to manipulate this stuff better so I can make them appear and disappear better. But right now, this is struggling at this sort of secondary resistance line as well that we drew off basically off of here and here. So you're struggling. There's a resistance line there along with your 20, and you're stuck in this sort of bear flag. So you have to be concerned. That's why I don't know what will happen, right? You just don't know what news is lurking and so on. I mean, the administration seems to want to talk up crypto at the very least. So it's kind of odd that it's this week in the face of so many of those sort of positive comments by the administration. But you can see that this just technically doesn't have its mojo at the moment. It needs to start breaking free of this. And really, to feel better about it, I think you need to get back over 100. But this is really one of the Achilles heels if you want to look for risk on. But as I'm saying, much like we said with with XLU, XLU, um, at one point, this for decades, for decades, this was really looked at as a defensive sector, and it basically was one of the last places that a lot of people ever looked to for trading opportunities, consistently anyway. And this may be changing, or maybe it did change. Maybe it's not changing. I don't know for sure. But because of, right, the power demand for due to all the developments, right, within the economy, which I'm sure you're aware of, this is maybe a different this is a different XLU, as they say, than Granddaddy's XLU. Maybe Bitcoin and crypto now is just being perceived a little differently. And I don't remember who, I forget who initiated the or originated the quote, but it's has something to do with, it's really funny how, sentiment tends to follow price, right? So when things are working well, more people are bullish, and when things are not acting well, more and more people start joining the bearish camp. And it's just human nature, and then I guess the nature of markets too. So anyway, right now, maybe that's just being questioned because maybe this is a little bit more severe, right? To go from 127-ish to 80, and then really fail to bounce back when the stock market is bouncing back so strongly. Maybe, just maybe, there's a problem here. It could have to do with, what the way that things are shaping up, how Wall Street plans to handle the space. Ryan thinks that it has to do with them wanting to take Saylor out on a stretcher and sort of corner the market for themselves in crypto. That could very well be the case. I mean, I'm the first person to say that plumbing, what's going on sort of off camera, if you will, that's not being discussed is definitely a part of the mix. And what happens to stock prices from day to day. I do think over the long run that fundamentals matter. I'm not disagreeing with that in the slightest. I'm just saying that, yeah, I think, in the short run, things happen and some crazy things can happen. But just to show you about, these trend lines, and if you're not, I don't even want to belabor it because I'm not getting compensated by the Trend Line Association of America or anything like that. But this is a big deal. We talked about this. I know some of you will remember. I don't even read the comments on YouTube. I don't mean to say that in like a dismissive way. It's just that I rarely have time. I rarely think of it. I have so many things happening in different ways that it's just very hard for me to even think about it. But I know some of you do say things, nice things from time to time. So very kind of you to take the time to make nice comments. So it's obviously greatly appreciated. I just don't see them, but if you ever do make a comment, it would be nice if you remember, if someone would comment, yeah, I remember when we were drawing these lines that a lot of people dismiss on Meta, and we drew them on Meta, I believe. We drew them on Apple. We drew them on, they're not there now. This was way back a few months ago. Maybe at this point, I'm thinking maybe it was even 5 months ago, 6 months ago. Can't even remember. But we were drawing these way back and on some of these stocks, and they took out those lines, and everything changed. I remember Apple definitely distinctively of how we said this could be a big deal if this thing's able to take out this downtrend, this line right here, which I'll make blue. And I'm not tooting my own horn. Trust me, I'm not doing that. What I'm talking about here is how people dismiss this stuff as voodoo. And you tell me, right, would you like to, if I'll modify the line just to make it very visible, and I'll leave it there in blue. It's imperfectly drawn, granted, right now, but you get the idea. We were mired in this downtrend, and we said this could be a really big deal with the higher low, things like that. You break through, you go. I mean, wouldn't you like to buy Apple? Well, I bought Apple at call it 214. I don't know, something like that. And not that you would have, it just that it started to show us that maybe, right, the downtrend was starting to peter out and maybe shift to uptrend. And I'm pretty sure we caught Google as well at some point that way, where we were looking at that and was doing, yeah, there you go. I mean, pretty much doing the same thing at the same time. I may have removed the lines from there for whatever reason. But anyway, that's the whole point, is that you drop these things on there, leave them there, just like we have in SPY, and you'll be surprised. I think actually a lot of people that don't do this, that are newer, I should say, will be shocked at how frequently these lines end up mattering. And you'll get good at drawing them, and they'll help you frame the action. That's what I think they do for me, right? So that's why when I say, well, where are we? And I would say, well, we're still in an uptrend, but because of this larger channel, but we're in a corrective phase within an uptrend, and we need to see if we can hold this channel. And if we don't, that's where big problems could develop. You get the whoosh, you hold though. First time down, we talked about this at the 100 after getting sort of bombed out, right? And your seasonality on tap. So then it all fits together of this could be the shakeout before there's a surge higher. And you got the FOMC lurking and blah, 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 blah. And so you add it all together. We try to anyway, and that's where you end up. So sorry about that little uh, tangent, but I'm just really a big believer in a simple technique like that that a lot of people dismiss, frankly, these days. But there used to be that was cutting edge technology a couple hundred years ago in this country. Anyway, so yeah, so things look really good, but we don't want to get too far ahead of ourselves. It may not be as easy as we want. There are still subsurface percolations that are out there that are not good, simply not good, and have the potential to really undermine stocks violently. But they are not being factored in heavily at the moment. That could change, but that's why, again, keep your risk management guard up. You've got to be smart and disciplined when those things are out there and the market is not just rip roaring higher. And right now, right, we went into this week where it just hasn't been rip roaring because let's face it, going up 5% in about 4.5 to 5 sessions, you would take 5% over the course of a quarter, let alone a month, let alone 1 week, right? So it's only natural that something pauses a little bit after that. I don't want to go into all these, but I'm going to flash them really quickly. I'm just going to flash these. But the bottom line, too, is another reason I should have said this too at the time, but another reason I'm more in that camp of curveball first is because a lot of these megas do not look really poised at the moment. They look a little messy to me. And so with those looking messy, then that to me is a little concerning. I'm going to bring AMD in because I have a bearish idea on that. And I really thought it was going to start to go, but we had a chance to put a bear in. Don't know what's going to happen. I don't even think it came close to triggering yet. But the whole point is I'm trying to prepare where I can. We just don't have a lot of bearish paper in UOA Pro right now. But we went through those. Microsoft's the next one. There you go. I mean, Microsoft doesn't look great, right? Nvidia, right? That could change quickly, but it's not doing much now. Gets above the 50, that's great. That gold line, then we're going to that'll really help the market. So it would be nice if that could take out the 50. Above the 50, I think that starts lifting spirits and maybe more, maybe other equities as well. Let's take a look at Netflix, which does not look good in my recollection. I mean, look at that. There you go with a new recent low there. So this is not a good looking package, friends, just not on the megas at the moment. Now, going again, we always have to hasten to add something could change, but I feel like this got a little too good, a little too fast, and that there's too much time left uh, in a lot of this stuff. So they need to almost sort of monkey wrench it a little bit to then set themselves up for the next scamper. Now that presumes that there won't be any really bad news helping to break the trend. That presumes that we have just a little quick pullback, sort of reset the deck, and then get set up for the second half of the month when we come back after next week's action. Uh, so I'm just going to say go with the flow right now because I don't think it's as cut and dry. I think it's more about you can't rule out upside, but I definitely think the downside, if I had to force a most likely scenario, which I did, I would think you get the curveball first. Yeah, I still think that only something really negative destroys the market. I mean, it's going to have to be, to really crack this trend. I mean, that's going to have to be something that's percolating that it hasn't been paid enough attention to. So I still think everything looks really good overall, but there's got to be maybe a little scariness first before we're on the runway to the Santa phase where we start to goose at the end of the year. Again, I did write it there, too good, too fast. Bottom line game plan, you just got to go with it. Above today's high, I would go with stocks, and below today's low at 683 in the SPY early in the week, it becomes interesting that we get one of those paths that we drop off a little bit more first, which I think, honestly, if you're not positioned too much right now, like I'm kind of light, it wouldn't bother me in the least because I think it would set up, nice buys not just for the end of the year, but maybe even into next year, as long as the trend remains intact, which I expect it to. But again, you always have to be open to new news. So seasonality is there for us, but maybe just not imminent, right? And we have this mess. We still could put the mess behind us, but we know that the paths are important. Just a standard reminder, I would just add this week, like, don't let the holiday season, when we get closer to the holidays, don't let that sort of draw you in and feel warm and fuzzy. Things still do happen. So stick with your discipline and just be ready. That's the message. I think be ready for a little bit more shaky stuff. And then from there, I think it still is likely that they find a way to keep things motoring along. That would be my take on it. And I think that's probably it. I don't really want to belabor it much more than I already have inadvertently. So I'm just going to wrap up on that note. But yeah, I think we covered all the major things. I didn't really cover, I should have noted silver. Silver is hanging in there itself, but a lot of the stocks within the group, precious metals, we have an idea here. There's a couple other ideas. They did okay last week, but it's been a no-go this week. So just a lot of disappointment in some of the individual names, as far as I'm concerned, because I thought they would start trailing up behind silver, but they haven't. So that's a little interesting. Maybe there's something going on there. We'll have to find out in the future. And on that note, I'm going to wrap up and just wish everyone a wonderful weekend. I hope you get this early in the weekend. I hope that something I shared with you last week and this week helps you in the upcoming weeks ahead or sometime in the future. I want to thank everyone for tuning in and take care. And if you do recall those trend lines in some of those stocks way back when, months ago, I don't remember when it was, 4, 5, 3, can't even remember. Please try to note that. I might try to make a point of trying to check YouTube for the comments. So thanks in advance if you do. Appreciate it. Take care, everyone.